The idea of a phone number at which we can register complaints would surely be useful in this country, though. We could, for example, turn in all those economists who have been predicting an imminent recession for the past 7 years. We could turn in the financial gurus who have been forecasting a plunging dollar. Just when it was supposed to be down around 100 yen, the buck is in fact buying close to 150 yen, and more than 2 marks, the dollar's strongest performance in 2.5 years. Traders who lately have been looking for any excuse to buy more dollars even took heart at today's blip in the producer price index. They figured that even a phony whiff of inflation might keep interest rates from falling too far too fast, and thus presumably making the buck less attractive to foreigners. Meanwhile, the bond market, which might have been expected to swoon if today's inflation report had been for real, took it for what it was, a lagging indicator of food and energy prices, and soared to its own highest levels since April 1987, which suggests better news ahead and lower mortgage rates for U.S. home buyers, too. So the dollar's strong, the bond market's euphoric, and even short-term interest rates like the prime started down this week. There's got to be somebody we can call to complain. We tonight will talk with the man assigned to pursue everybody's complaints about the financial markets, the chairman of the Securities and Exchange Commission. And we'll be reporting the results of an exclusive nationwide poll of what America really thinks about Wall Street these days. But first, let's let E.T. phone home with the stock report. And as the Dow Jones Industrial Average suggests, it should be a short call, assuming he has better luck than the president in getting through. The Dow churned all week, finally failing to make another new recovery high and finishing with a loss of just under 4.5 points at 2513.42. But the broader indexes all gained for the week, with all but the S&P going into the weekend at post-crash highs. Our elves, still stuck with the one-week sell signal on their technical market index 17 weeks ago, moved their technical market index up a notch to an only mildly bearish -2. The elves claim their index predicts the 3 to 6 month trend, which means that they now have 9 weeks to produce either a stock market tumble or an apology. And speaking of apologies, has anybody seen any gold bugs lately? Their favorite metal, a disaster throughout the 80s, fell below $360 an ounce to its lowest level in nearly 3 years. Will somebody please lend them a quarter so they can phone in? Frank Cappiello, this market certainly hasn't cracked yet, but isn't it beginning to look a little tired?
Well, it is, Lou. We haven't had a decent correction or real correction in some time. But beyond just a normal correction, I think this market's headed much, much higher now. We're going to go through the old highs probably before the year's out. And that would, of course, make me a loser, too, on the year-end sweepstakes.
Well, you know the old rule, if you're going to predict often, we'll give you a chance to update.
Absolutely.
But what's a normal correction?
I would say a correction of about 5 or 6% would be normal in this kind of market. But we've had very, very minor corrections. And I think the reason has been that the direction of interest rates now is certainly down. The strong dollar really means that the Fed has a lot of options now to pursue in terms of money supply, in terms of lowering rates. They don't have to worry about the dollar.
Frank, if I'm right that inflation's not going to run away despite today's news, the other danger is that we'll go the other way. We'll have a recession and earnings will fall. What's the prospect of that?
No, I really do believe in a soft landing now, because while rates will be coming down, the economy will gradually be declining, because, you know, the Fed has had tight interest rates for almost or rather tight money for almost a year. Interest rates have gone up by more than 40 or 50% in that year's time. We've really choked off the economy, and we're beginning to see the effect of that choking. So as the economy comes down, as rates come down, I think we'll come to a soft landing for one simple reason. You cannot have a recession in this country with a world economy that's going up. And the world economy is very, very strong.
We cannot. I'm going to write that down.
Absolutely. No, well, not for the next year or so.
Okay. I'm glad. I always want to know the rules.
Right. Okay, though. Right.
Pete Colhoun, do you share Frank's confidence?
No. I'm a contrarian here. I think the news is too good to continue the markets going, and that may sound funny. I think that if we use the negative sentiment at the beginning of the year as an index that the market, in fact, was going to do well. With the bullishness in Wall Street now, it should be a clue to us to be on the sell side.
Is that bullishness now at euphoric levels that are dangerous?
In my opinion, very close, like another 100 points on the Dow.
Some of these stocks that had been standout performers in recent weeks were laggards this week. Is that in itself a sign of a possible top?
It's more to me that the bears that have been creating a wall of worry have come around in the last couple of weeks. With regard to the economy, whether it's we have a hard landing or a soft landing, it looks to me more like a hovercraft. We're just staying a certain distance off the landing pad. And I am a seller on strength, and I would stick with my emerging growth group. But I am very cautious here, and I would look for a second half, not looking at all like the first half.
Well, why are you holding on to stocks then?
Because I'm not that sure of myself.
Jim Grant, usually we can count on you for a few words of caution after others have been euphoric, but now Pete's added the caution. Would you like to be euphoric?
Pete's added the caution, but not the fear.
Okay, okay. Will you panic us then?
That is impossible. What we've learned this week is that a 0.9 on the PPI is in fact bullish for bonds, that there is going to be no recession, ever. And in general, things are so perfect that they can hardly get better. But of course, that's not true. None of that's true, I think.
What is true? Tell us so we will know.
What is true is an interesting feature of the interest rate environment, which is that although rates have come down in this country quite handsomely in the past couple of weeks, I think that they may be going up in places like Japan. Now, what makes Japan important is that it is the big provider of bank loans across national boundaries. It provides something like 85% last year of all the bank lending that was done among and between countries. A big deal. So if rates in Japan go up because of a weak yen and inflationary pressures in Tokyo, wow, that might be a big deal for us in this country.
Jim, I presume, having heard you over the months, that you are not an owner of stocks now and have not been for a while.
What's a stock?
Yeah, but let's assume, for the sake of crazy argument, that you're right. What would you do as an investor now?
Sell stocks.
But you've already sold. You could
yes.
sell them short, or?
Well, I regret that I had sold them in 1982. Well, I think that things are going down. There's going to be a recession. There's soft landing is the great incantation and shanty of this year. It's not going to happen. And that what will repay an investor is to be liquid when the world is illiquid. So I'm all for cash, and have been, to confess.
You and my butcher have that in common. They don't accept prestige. They just want the cash. All right, this is the point in the program when we normally pause to answer a round of viewers' questions. Tonight, though, we're going to be using that time to report on some questions we asked in our nationwide poll. Next week, though, we'll be back in our usual role of responding to your money questions. So let's hear from you with your queries, comments, and most intimate thoughts here at Wall Street Week, Owings Mills, Maryland, 21117. That's Wall Street Week, Owings Mills, Maryland, 21117. Now, before we meet tonight's special guest, let's take a look at the results of our exclusive national poll. We commissioned the Opinion Research Corporation to ask a cross-section of 1,045 Americans what they thought about the current state of Wall Street. With the customary error factor of 3%, here's what we found in our survey of how Main Street rates Wall Street. Perhaps surprisingly, in view of all the recent headlines, fully 60% of the respondents thought Wall Street was at least as ethical as other industries. 20% said it was less ethical, a figure that rose to 25% among those who actually own stock. But fully 36% of those surveyed said Wall Street had become less ethical over the past decade. And those who gave that response included 41% of the stockholders. On the other hand, 16% of those responding thought the street's ethics had improved as compared with 10 years ago, while 26% could discern no change. Suspicious or not, most Americans still think Wall Street is a good place to invest. 59% said recent scandals had not made them less likely to buy stocks. And here, the present stockholders were even more emphatic, with 66% voting for continued investing, Michael Milken and Ivan Boesky notwithstanding. Nearly a third, though, said they had new reservations. Do you know who Michael Milken is? Never assume that those journalists who spend all their time on inside Wall Street gossip and rumors are talking to the mass of Americans. Fully 82% of those polled admitted they still had no idea of Michael Milken's identity. though the junk bond king, centimillionaire, and alleged violator of securities laws has been all over the financial pages for years. 1%, incidentally, thought they knew who he was, but misidentified him as anything from an author to a candidate for governor of New Jersey. Which takes us to tonight's subject, regulation of the securities industry. 64% said it needed more. 16% said less would be better. Interestingly, those who owned stock, 29% of the total, were slightly more inclined to favor less regulation. As for the Securities and Exchange Commission itself, 41% of those responding said it was effective in regulating the securities industry, while 35% disagreed. Stockholders themselves split on this one, 45 to 40. So Americans, while far from ready to rip up their stock certificates, seem to have quite a few qualms about the current state of the securities markets. For the views of the SEC chairman himself, let's go over now and meet tonight's special guest, David S. Ruder. David, welcome. We're very pleased you could be with us. Please. On August 7th, 1987, David Ruder was sworn in as the 23rd chairman of the Securities and Exchange Commission. Just over 2 months later, the Dow Jones Industrials plunged a record 508 points in a single day. There was no apparent connection between the two events. But as they used to say about hanging, it did focus the mind. Mr. Ruder, a former dean of the Northwestern University Law School, has announced that he will soon be returning to private life, which means that unlike most public officials, he can now speak with total frankness about the issues confronting the country. David, what is the single most important thing you've learned in 2 years at the SEC?
I've learned that regulation of our securities markets is doing well, and that we are going to pursue a continuing course of vigorous enforcement.
How honest is Wall Street?
I think by and large Wall Street is very honest, but there are in the midst of Wall Street some professionals who are not honest.
Even with all the prosecutions, week in, week out, before a major news announcement, the stocks involved have moved. Clearly, somebody is doing inside trading. What are you going to do about it?
We're doing a great deal. We have a surveillance system which we are cooperating with the exchanges, which bring us information about the market movements. We have information about the people who are engaged in that trading, and then we put the information, the market movements, and the names of the people together to find out whether there is insider trading. You may remember the Wang and Lee case, in which the gentleman from, I don't know if he's a gentleman or not, the man from Taiwan was trading on inside information. We put that together, that case together through a market surveillance system.
Are your tools better than they were a few years ago?
Oh, yes. The exchanges have upgraded their surveillance enormously.
What does that mean? You know who's doing the buying now?
Yes, we know who's doing the buying. We know who's doing the selling. We do have some problems in terms of getting current information, and we do have some problems with regard to what I would describe as third-party transactions. We can't get behind bank ownership or some other ownerships very easily.
Are you going to advocate new legislation?
Yes, we are advocating that we be entitled to find out the real identities of the traders.
As you know, and as our mail reflects every week, millions of small investors are disgusted with the current state of the securities markets. They think that they are dominated by institutional traders who use computer programs with no sense of either the economy or the financial merits of the securities they're trading, and that it's become a gambler's game as opposed to an investor's game. What would you say to those people?
I would say to the small investor that investor ought to invest in our economy, ought to buy stocks and hold stocks, and should not try to play the professional market timing game.
You mean he can't be an in-and-out trader?
I'm very negative on the in-and-out trading by the small investor, and certainly if he does that, he ought to find either an investment company can do it for him, or a very wise professional who can guide him.
Do you feel that anything can or should be done to curb computerized program trading by institutions?
No, we've done quite a good study of that, and We believe that computerized trading and the futures market, the options market together provide a very good vehicle for institutional trading. We do believe that there should be some brakes on that trading in times of extreme volatility, and as you know, Lou, we've put, with the cooperation of the exchanges, have inaugurated a 250-point circuit breaker on the Dow Jones, so that if we get into an extremely negative stock market situation, we'll be able to halt the market for an hour.
Isn't there something unsavory about the simultaneous trading of as many as 500 stocks with no regard to the merits of the individual stocks?
Well, you have to talk to the economists about that, but the answer is no. It is a matter of risk shifting. What's going on in our economy today is that we have an institutional market. 45% of the stocks in the New York Stock Exchange are held by institutions, and approximately 80% of the trading is by institutions. These institutions hold portfolios that are so large that they can no longer trade in an individual stock, so that if a pension fund wants to balance its portfolio between stocks and bonds, it must do so by selling a whole portfolio rather than trying to sell individual stocks.
Has anything happened to make the prospect of another 500-point fall less likely?
That's a very good question. We have increased the safety of the market in the sense that we have information systems, execution systems, market order routing systems that are better. We have done something to increase the liquidity of the markets, and we have, that's the SEC, have improved, we think, the clearance and settlement system. But I think there's no guarantee against the institutional investors deciding that they'll move together in one way or another.
Were you an individual investor in years past?
I was.
Will you be in years hence?
I certainly will be.
Will your habits be any different because of your experience with the SEC?
I don't think so. I'll still use a professional market money manager for my own trading.
You won't do it yourself?
I'll do some myself. I can't resist doing a little bit of seeing whether I can beat the experts, but not enough to put myself in any real trouble if I should make the wrong guesses.
We mentioned Michael Milken, I mentioned Ivan Boesky, but the heads of some of these firms, including Milken's firms, have not been charged by the SEC. Is this something that may still happen?
Yes.
So it would be premature to discuss that as a pro or a con.
I can only tell you that it is our usual procedure that once we have obtained a result, particularly an injunctive result against a firm, we will then look to see what to do about the individuals in that firm.
What is the essence, in a sentence or two if you can, in English that people can understand, of the charge against Michael Milken?
Michael Milken is charged with manipulating the market, engaging in insider trading, and buying stocks and not disclosing them in advance of engaging in tender offers, all of which are injurious to the market and the people who buy and sell stocks in that market.
Well, we'll be getting Mr. Milken's answer to that, but meanwhile, let's hear from three people who are clean as a whistle, starting with Frank Cappiello.
Thank you, Lou. David, while you're at work nationally with the SEC on national stocks, there's a big global market out there. A lot of stocks, American stocks, are traded on a Japanese exchange, on the London exchange, and so on. What kind of coordination are you doing with other commissions, so to speak, like the Japanese and the Germans, and so on, to level the playing field for all of us?
Well, there's an organization called the International Organization of Securities Commissions, which is very active in coordinating international securities regulation. In addition, we are working on a bilateral basis with the Japanese, the English, the Dutch, the Germans, the Spanish, the Mexicans, to try
and
to...
the Italians.
And the Italians, to try to see that we have a good understanding, and particularly in the enforcement area.
Okay.
Dave, everyone thinks of the SEC as the protector, policeman in the securities markets, and the financial statements are right. Probably the greatest loss the American taxpayers are going to encounter is the S&L crisis and what that's going to cost. Do you think that the SEC should or could have been more aggressive in overseeing the public S&Ls to bring the problems of the S&L industry to the forefront sooner and to head off the enormous $100 billion plus problem we have?
Well, fortunately, I can tell you that our primary responsibility. We did not have primary responsibility for S&L oversight. And you can bet that after this crisis came, I went to our corporation finance people and asked what kinds of disclosures were being made and asked them to see whether the publicly held companies deserved enforcement action. And I'm pleased to say that they have not. They've reported to me that that action, by and large, is not necessary.
David, the SEC is quite insistent that private companies disclose their affairs, and increasingly it is insistent that municipalities disclose theirs. When is the SEC going to insist that the U.S. Treasury give us an accurate representation of the government's finances when it sells bonds?
Fortunately, that's not in my jurisdiction, so I will.
It's not.
I can't.
Well, shouldn't it be?
The U.S. Treasury bond trading is a different environment.
Oh.
Is a private market, as you know, dominated by private people.
Okay.
What's the best thing you've done in 2 years? What's the biggest frustration you've had in 2 years?
I think I can't say one best thing. I think that our attention to internationalization, our enforcement activities, and our increasing attention to problems coming from automation of the securities markets are the best things we've done. Frustrations probably fall in the people area. Congress not giving us the kind of money we need for our exchange, for our agency. The press, who sometimes don't understand things the way I'd like them to understand them, and even my own commissioners, who sometimes are feisty and don't always do what I want them to do.
You got some criticism yourself right after the crash because you said the markets might have to be shut down. In retrospect, are you sorry you said it?
Yes. I've learned to, maybe not as much as I should, but to be a little more silent about things.
The Brady Commission, headed by Nicholas Brady, now the Secretary of the Treasury, recommended a super regulator, as they called it, oversee the SEC, the Commodities Futures Trading Commission, and they thought that the Federal Reserve should run all you folks. You disagree. Why?
Because two reasons. The SEC, of course, has the greatest expertise in this area, and I thought the natural entity to engage in this regulation was the SEC. Even the Fed itself did not want to do that regulation, and I think correctly so. They are involved in macroeconomic matters and should not be into micro management of the kind that we're talking about.
Can you do the job you're supposed to do of regulating the stock market if instruments like options, well, instruments particularly like futures, are under another regulator?
Yes, we can. We learn to live with things, at least in my view, which are not perfect, and we have a very good relationship with the CFTC in terms of joint regulation of the futures and stock market.
Thanks very much, David Ruder, a man who has headed the SEC at a time when it did the most publicized prosecuting, at least in decades, if not in its history. Thanks to our panelists. Hope you'll be back with us again next week. Then my guest will be one of the most influential market timers in Wall Street. He's Alan Shaw, whose perceptive calls on where prices are going and which ones will go first have been winning admirers for more than a quarter century. Let's see if he can win you right here. Meanwhile, this has been Wall Street Week. I'm Louis Rukeyser. Good night.
Wall Street Week with Louis Rukeyser has been brought to you by public television stations and by Prudential Bates Securities, the investment firm with rock-solid resources and market-wise thinking in the business of making money. For a printed transcript of this program, send $5 to Transcripts, Wall Street Week with Louis Rukeyser, Owings Mills, Maryland, 21117. That's $5 to Transcripts, Wall Street Week with Louis Rukeyser, Owings Mills, Maryland, 21117. Wall Street Week with Louis Rukeyser transcripts are also available to subscribers of the Dow Jones News Retrieval Service. Wall Street Week with Louis Rukeyser is produced by Maryland Public Television, which is solely responsible for its content. Local broadcast of Wall Street Week with Louis Rukeyser is funded by Tyco Laboratories Incorporated, a nationwide diversified manufacturing company. First NH Investment Services, a member of First NH Banks, a dedicated money and investment manager providing individuals and corporations in New England with a full range of investment services. And the New Hampshire Insurance Company and your local independent insurance agent. The New Hampshire, your connection to the world.
The New Hampshire Stock Report is made possible by Dean Witter of Portsmouth, now also at 1001 Elm Street, Manchester, a member of the Sears Financial Network.